Emerging markets have been hit by jitters caused by the U.S. Fed's tapering of its stimulus, and now mixed economic data from the U.S. and China are complicating the situation. With Korea still belonging to emerging markets, how is the country faring, and is it safe from getting engulfed in future shocks? Our Yoo Li-an has more.
Is Korea headed for a crisis along with other emerging market economies, or will it differentiate itself from the rest of the pack? While Korea came under a major sell-off by foreign investors, it still seems to be taking a different path from that of developing economies. The benchmark KOSPI of the Korean stock market closed at a 5-month low on Tuesday, and offshore investors sold a net $1.4 billion worth of KOSPI stocks in January. But on the bond market, foreigners kept buying Korean securities worth $1.6 billion in the same period, some $200 million more than the amount they sold in the stock market. Korea's credit default swap premium for its sovereign bonds, which shows a country's risk for default, also stands much lower than other emerging market economies, at 75.5. This compares to India's 275.4 and Indonesia's 235.2. Korea also has ample foreign currencies as it has posted current account surpluses for the past 24 months. On top of that, there's Korea's large foreign exchange reserves, which hit a record high last month. Data from the Bank of Korea showed that the reserves reached $348 billion as of January, up nearly $2 billion from the previous month. While Korea's economic fundamentals are relatively sound, its large and liquid stock market makes it easier for foreign investors to cash their investments. Experts warn that since foreign investors hold a huge proportion of Korean stocks and bonds, once they're spooked by a crisis affecting emerging markets, Korea may have to brace itself for a major market shakeup. Yoo Li-an, Arirang News.